Okay, guys. Hey, everybody. Welcome to PPT June 13th coaching call. For the hardcore that attended, thank you for showing up. Not many people want to show up in the summer, but in the summer, when it's quiet during the doldrums, is when you could potentially quietly build positions or strategize in times when it is more volatile. But we're going to start off today with a cautionary tale. We're going to start off with curve. Curve crashed today when the founder took out highly leveraged collateralized stablecoin loans and just drove the price down in this coin. But we're not really going to get in too much into the fundamentals of this. We're actually going to go back in time a little bit, and we're going to go 2021, November, when Curve was up at around 686. So this was in September. So on certain things, for certain, like when I'm trading Bitcoin or Ethereum, for certain coins that I know about, I will defer to certain other folks that have fundamentals and not technicals to expose me to certain projects that have good potential, whatever. So one of those is Palm Beach. Now, Palm Beach is good for exposing you to new projects, but I would say their timing, just based on my experience, hasn't been good because this is a situation where I took a signal that violated a basic rule. So I'm just trying to go back in time. If I bought this in September or November, I think he gave the signal in November. So it was sometime in this month, but you could see basically, right? We were already multiple legs up. And right, his targets were much higher, despite we having here a very significant on this retest double top. So just basic things that we teach here, right, is that you get out at a double top on a daily chart that's very wide. You don't question whether it's going to break out or not. You just have to reduce risk there. And because I deferred to a strategy that was largely based on an if-then scenario happening, which would then bring a huge amount of onboarding, like an event-based thing, and that whatever got delayed, it's like the thing never happened. So it's like if you go against what basically the psychology of the charts, which is that, hey, a lot of people here that probably bought at the highs got destroyed. So when they come back up, right, on any double top, there's going to be people selling again. And there's also just going to be other traders that are just going to sell again anyway, just because um, it sold again before. So just because you see some event or news or anything, if the charts don't match, I would always bet on the data and the charts, because if you look at the charts through the right, correct lens, principle based, they are going to make you right enough of the time. Because like, look what happened. This might have been right, and we haven't really gone anywhere near there, right? We've been under we're 28 cents, and this thing got to $6. So it's like whatever project was happening, Tika got us in at a pretty expensive price because it wasn't a technical based thing. I mean, some of his technicals are sometimes buy up price up to the all time high. On that same newsletter, which should have also alerted me to the lack of sound technicals that should be accompanied even with fundamentals, right? I don't think they should be separated. If you're just going to base it on some event or fundamental thing happening, it's not good. But you can 100% have a strategy that's 100% technical base. I just don't think you can have one that's 100% fundamental base, because you still need the honesty of the charts to get in, not whether an event will happen or not, or whether someone will do something or not, or if someone will rug pull or not. So yeah, regardless of that event that was supposed to happen in the new year, getting in at these higher prices, right, is not something that we don't establish cores at all-time highs or pullbacks near resistance near all-time highs, right? We either have to wait or not, and that's it. So that hasn't recovered at all, right? And then this is sort of like the finishing blow. Now, what could happen here is that sometimes these things get so undervalued that the value buyers come in. They're like, man, this thing's at the cent level, man. The project's not completely dead. The guy that, did pull the rug has now, I guess, made some. And what he did hasn't illegal, but they can set things up where it's so immoral that it should be illegal. But so he's borrowing debt on his coins in his community that he pledged not to do this to or whatever. and now he's buying, he's got the mansions and everything. But um, I guess he's doing something to help stabilize the price was the latest update. You see, that's why I really can't get even. And the funny part is I haven't even thought about this coin in years until now. So that just goes to show you that you can kind of get too caught up into this broad universe of getting into these. Now, you don't have to obviously hit a home run on every single one to make tons of money. And you also can completely uh, devoid yourself of a staking, farming, huddle strategy if you want as well. It's just that would be more work, but it's also less risk. So while this is taking the biggest, this is probably has the most relative weakness out of any coin today that got near 20%. Now let's see what it's at right now. I think yeah, so it's recovered somewhat. I mean, obviously, right, there's a buying tail here. So some value buyers came in. But yeah, anytime a coin has a scandal, I'm not going to recommend it just out of that reason. I'm not even going to. But this is just something that this was just a cautionary tale. I think it was in 2021 when I bought this when I was reading Tika. He also had a signal service too for traders, which when his first trade had a 9% stop loss, you could just go back to our Monte Carlo sim in the channel if you type that in. And you'll see why a 9% stop loss is almost a guaranteed failed strategy. It's just too big. You have to have a stop that's going to give you enough chances that's going to take advantage of random distributions of unluckiness. And you can see Ton is the only coin today that's really having any relative strength, which is pretty incredible. Well, not 100%. Well, these are stocks, some of these here. Bohm is another coin. But yeah, pretty much the universe is down today, except for the ES, which remember yesterday, guys, I talked about that once we broke this short-term bounce breakout pattern with this V sideways dip go pattern, we're literally going to be breaking this giant range. It's multi-month, and then you're going to have short-term up, intermediate term up, and now the big picture, a giant bounce breakout up. Now you're going to have multiple time frame alignment where, until this gets super overextended, you're favoring support vastly over resistance. This thing gapped up. I went all out yesterday near the highs, which if I kept my runner in, that gap would have been nice. I could have just, I should have took my own advice and said, hey, just keep that other half in. But the tick was weird. I don't know. It was a news day yesterday, so I just was like, when you see those trend days and it's not above zero on the tick, it's like that's pretty weak. And we did have a pretty steep retracement. But if you just don't care about the runners, you don't know when you're going to get lucky on them. I mean, I think it was just an emotional thing where the other time in Bitcoin, my Bitcoin runner that I had from lower got stopped out. And I was like, I got to take some profits. So it's like, it's tough sometimes to that last runner could be, depending on the zone, you're not supposed to care about it. But at the same time, we're human beings and you do care about it. So it could influence how you're doing it on the next one. But when you do have time frame alignment, this is when you can build these positions, especially if if you have a runner from anything even up on these positions, right? I mean, even if this thing comes back into good support, right, then the time frame alignments can get aligned again. So even though we have multiple time frame alignment right now, the short term could get neutral or uncertain, a little sideways action, and we're going to get some selling. But then it's like as soon as it hits any decent support, every support now time frame alignment, right? You would be going long. Whereas if we were neutral in our larger time frame buys instead of bullish in our larger time frame buys, then we would not be indiscriminately going long every zone or less aggressive. It'd have to be something very good, a very good zone, a very wide double bottom. Whereas this one could be, if you have more aggressive, a 15-minute double bottom, or even if there's trending action, you could even do a pullback continuation. So that was our ES breakdown. Let's check out Ethereum. Right. So what's happening is that, Ethereum we had a structure here where we had a very strong launching directional conviction candle, which then broke above this market structure key swing high, and then we stabilized, right? Many chances right here, for sideways price action, where if you get into a good zone, you know, you get up here, right? We had back and forth action. But the thing is that if this doesn't hold here, right, what's going to happen is that we're just going to have a retest of this giant balance, right? Which would not necessarily invalidate the big picture, but you know, would just extend the time frame. And it is tough when you see such institutional level buying, right? It takes out so much data, and then we have these steep retracements. But keep in mind, just from a fib perspective, this is not invalidated yet. This trend is only, right. We are right. We just had the halfway point, and now we are at the golden ratio there. So there's nothing right here that this is invalidating, right? This is actually, if you were aggressively waiting for a pullback continuation, right, this would be what you would be looking for. It's just that I've actually position built here when we were giving signals on the channel, so I'm in no position to reload here. But I'm just saying, just from a technical perspective, this is still not invalidated yet with this golden ratio here. Now, Bitcoin had a kind of a stair step pattern. It didn't have such a severe candle like that, right? But it still had strength. I mean, this is taking out data, a couple day rest, taking out data, a couple day rest. Healthy. I mean, this is not a place to establish a core position at all, especially on a day when it's down. I took that little stab. I got out with the quad. Really, when we get up here, anytime we're testing a major resistance zone, right? These should have been, if you were on the short side, pretty much automatic shorts, right? Even if you're holding these positions long with runners, because trade location is really a key edge, right? And to break such a strong zone, you're going to have a day with outstanding relative volume, huge pace price action, and more than likely than not that's that day in and of itself over a large sample size is a very rare day in and of itself, let alone trying to do that under a resistance zone. So my advice is that when it got up there is, you're not going long, right? Because like if you got up here, right, and even if you zoomed in on this day and you saw a nice little double bottom, and you could have went long here and you would have got a nice little move here, but think about it, this little double bottom zone that you see on the 15 or 60-minute chart is a lot smaller on an inch, that time frame than this resistance zone, which you'd have to zoom out to see, which is not a 15-minute double bottom. It's like a quadruple pentuple top that is multi-month. So that is just larger. So you're not going to be getting long underneath here, right? You could be going short, or ideally you just don't. You're not, if you aren't comfortable with futures trading, then you just don't do anything. Futures trading is the same thing as going long. You're just on the other exchange. You're reversing their price. I still don't recommend, just because you can leverage there, that you go 1x, anything more than 1x. These guys that do that 2, 3x, I don't know what their account size is, but they're basically pretty much willing to blow that account on anything. You know, I've seen guys do crazy. I don't even know how they would do 100x. I don't know what that would mean. It would just mean that I would get liquidated really quick in my mind. So I don't even play with that. But 1x, yeah, that would just mean it's like going spot. You're not leveraged at all, but you have to write one in. I'm just doing it through the API mechanism. You guys would probably just do it on an exchange. So. Now, CAS has maintained this pullback continuation pattern that I said. So this was actually for traders to get in, but this was not a good spot to reload, because this was probably going to be another top here. And once again, this is topping, right? You could see, like yesterday, the hint that the whole market was going to turn was in the selling tail. There was no conviction to close up high. There was actually a panic sell. So that was kind of giving us a heads up. There's going to be, at the very least, some uncertainty. It's not like the bulls were in control. If it had closed up here, that would be a different story. We'd have to see what would happen. But you could see this was very strong. But even if it did close up here and you did short that, that's still correct process, because that is broken resistance until it's valid resistance until it's broken. And it is large in nature. And the larger the zone, the larger the move that can come from it. So this is basically, what the bears have is superb trade location as this presses up into this major zone. What the bulls have is or what they did have was the momentum of this candle and then the pattern of this pullback continuing. So it's like basically the trade location versus the bigger picture pattern. And that's why when you have two forces going against each other, you're going to get indecision. And the indecision is represented by this short term whipsaw nature where we're having the bulls and the bears fight. But if you just look at it, just on this time frame, if I zoomed in, there's a tail here, little tail here, but just look tail, 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 whip tail. I mean, so the selling is very strong on the short time frame for sure. Neutral is saying that you're not really certain who's in control, but if you were like, hey man, I'm neutral bearish, I'd be like, yeah, I get it. Neutral bearish. Intermediate time frame, you could still say possibly neutral bullish because you still have the strength as this pushes in, right? But short term, you have to say at the very least that you're neutral to neutral bearish because of the strength of this zone. Now, if this pattern needs to resolve, and then we'll figure, so if this pattern resolves with a sharp break to the downside with conviction, then you say, okay, well, now we have time frame alignment down to the downside. I'm backing off of support until we get, if I was super conservative, to the bottom of this trading range. Because even if I come into anything into this high volume node, I mean, just look how we behaved here. Okay, fine. Launched up, support, but then broken, support, but then broken. So you could see right here, we're just trading around it. It's not 100% set in stone what this would do. If we came down here and price behaved in a way where we were pausing, then yes, but it's like, just be careful when a price breaks a fractal, it can start moving pretty strong the other way. You could see here, here's a fractal. And then once it creeped up and then broke, it started moving really strong the other way. So I'm not going to short, oh, this high, that, and these are nothing, So that's what we have to be a look at is when you come to PPT, you are looking at the market holistically and you're going through a checklist and you're looking at all these different data points. So you're actually looking at different truth points that can then hit pocket you to a possible probability distribution that can make you money over a large enough number of trades. But if you just look at our hit rate in our past week, it's a lot higher than 50, 60%, which could still make you money if you were really good and really abided by our stop loss rule, which everyone knows is 1% to 2% for our income producing trades. 2% max. Really, I think that could be even too high, depending on how large your account is. If you have a wide 2% stop, and just bet a quarter size kind of a thing, you know what I mean? Or if you even want to go higher than that, let's say you needed a 4% stop. I don't know why you would. And you still wanted to abide by the rule, then you'd have to go right a minimum or a maximum of fourth, rather. Or a half, rather. But that's a position sizing thing that you guys could check out as well as in the channel. Now, this was a trade that we gave the other day as it pressed into the, I'd have to go back and look, but we took profits as it came up into here where we took half off. Possibly on this one, I think I might have took 25 off. There were 6 trades that day. But I'd have to go back and remember to look. But, right, we're not stopped out. We still have a runner in. Now, if you're an investor, you're probably not happy because, it's tough for me to give investor and trading signals because personally right now, it's when I see a chance to take profits, I will take profits, but I know exactly what I'm doing with each allocation. So that's why I said, okay, well, in this sense, if you're a trader, you're definitely going half off the stop break even. If you're an investor, then I guess you're holding and you're building a position. But you could see, if this reverses, then you got to have the guts, I guess, to just sit through it. And then if it gets to another level, the DCA guy would go in again. But that's also a quick way to destroy your account and is actually the opposite of our trading account. But since we have people in the channel that are both traders and investors that run both these systems parallel, some of them do both. Like I also farm stuff as well. So I kind of put DCA into things, but it's also the way to make the most amount of money, but it's also the way to lose the most amount of money too. So just make sure you know what you're doing with each allocation. Yeah, these were trades. So this one must have been stopped out. I have to go check. Yep. But that's what's great about, when we take half off, we're moving our stop to break even 9 times out of 10, possibly even more. I'll probably tell you if I don't because I'm thinking, hey, this is just a chance to reduce risk. I would probably buy here again, but it looks whatever. But I'd say the secret really to this is being as patient as possible and actually being okay with missing moves and being patient. Like today was a good day to be patient, right? Yeah, there's no reason to really get overly aggressive today if you didn't happen to catch the highs on the shorts. Now, I had a, for some reason, I think at nine something, I don't know, I had a, at the post office, there was a short opportunity on for Bitcoin. We can take a look at that, but you don't have to catch every single move, right? So this was probably the trade of the day for sure. If we just go back and backtest this, and I was saying myself, why didn't I take this? Oh, I was at the post office. Okay, because this would have been an automatic short because I had this zone drawn prior. It was resistance zone. Now we already had when we came up here a selling tail, right? Now usually like oh the more times you test the zone, but given this selling tail and this was the high of the day, and specifically if we just zoom out top down, right? We just had this island pattern, right? We could go on the daily and do a daily call why there was a lot of odds for down, but this thing was a failed attempt yesterday, so there was good odds for this to have a rotation down, and that's what happened. And then the low risk setup for that was I think right here into the zone, pressing up with the stop, because this would be a really nice, this would be like a 400 point stop, right? And a 400 point stop, right? If we do 1%, if I got in at 68,204, that's a 682 point stop. That's 1%. So this right now is less than 1%. So that's within our rule. Like if it's less than 2%, it's in our rule. But if you can find a trade that's in less than 1% in your rule, then you're doing a nice low risk setup. This isn't like, oh my God, I can't wait to get in type of a trade, but this is a clear invalidation point. You know what your risk is. No reason to get it super high up here or anything like that. You don't have to, a lot of people say, oh, the invalidation point would be yesterday's high. Well, what's the context? I'm not going to have a stop loss on Bitcoin that's way up here when this would clearly, if this thing breaks, it could trend up here and this might be another trade. Why wouldn't I get out here and then consider that one again? So let me get rid of some of these. Once you break through a zone, it's invalidated. So if you use zones, let's see who's in the room. So yeah, this was I think the trade of the day. This was the trade when I happened to be scanning. I said, what's the low risk setup? I said, I don't really like this triple bottom, but it was at support. I didn't like it because I saw this and I said I would want to short and hold through this, but this is support. So I said I will take it on a bounce. Got up here. I said, just really tight. I wanted to just the instinct was to take half off, move stop rig, even because I thought maybe I shouldn't even got in because I'd rather have been short. And bam. And I even said, hey, I'm not getting in again. And then that happened. Now this really, if you were going to go long today, this was the strongest zone, right? Just we had the biggest move off of this zone, and right, huge move off it. I didn't take it, but that was completely a better trade from just an edge perspective. If you were going to go against the bearish buys today, which I don't really recommend that you did because you can see the bears are in control. But if you were going to go against it, this was a better long simply because you had a stronger move off of this zone and this was more extended. Remember, these are just tradable reactions if you were going to think like this, because really who's in control on the day? The intraday bias is bearish. The bears are in control. It's just that they're not in control in a way that's trending like very strongly. It's sort of a normal variation day, I would say, to the downside. It's like kind of a hybrid of a sideways and a down, but it's not a trend down day. See, this is a trend down day. Anyone, you just don't want to step in front of this, right? Even though there's, by the end of the day, there is a possibility this thing could reverse, but most likely trends end 90% of the time at the low of the day. This just happened to be one that kind of got a late bounce. I think I shorted this too for a loss as well. But this was the short that I was in that I unfortunately got out of. That would have been a monster short. I forget why. I think it's because I was in 5 longs that were popping up and I felt like the market might move up a little bit more, but that one would have worked out. So there is this other market inner synchronicity relationship, and all these principles when they line up, at least for my execution of it, like not everything's going to be perfect. Not every probability distribution is going to result in what you want, but more times than not, it can keep you on the right side of the market. This is the other trade we gave. So I think this runner might still be live because the entry was, I'd have to go back and see. if I gave it on this double bottom. I'd have to go check. But yeah, that was 2 days ago. So like you could see when the opportunity cycle is there, there was an opportunity cycle for longs here, and we made profits, but you know, there was also an opportunity cycle for shorts here. It's just I find that at least for me, a lot of the times when the rotation happens short, this is like going towards midnight, I'm asleep. A lot of these times, I feel like the great shorts that happen with trade locations tend to happen at least when I'm asleep. And then I have to remind myself, well, you missed a short. That doesn't mean that you have to go long unless it's a sideways day. And this was more of a sideways down day. And Corby, you called the sideways down call. Did you want to talk about that a little bit?
Well, maybe what was significant, and that is always helpful since the signals are always difficult, meaning it always looks great afterwards. Um, but to take a signal in real time is a big difference than to to validate it once it has happened. So the two shorts that were taken today was uh, that Bitcoin pop up um, at 8 Pacific, at 8 Eastern, pre-market, that created that double top on 60-minute. And this is a very difficult signal to take from a perspective of where will the market go today. And me making the daily call yesterday, and it was uniform for all markets besides ES, um, helps you to take this. So this is a good example for maybe if you would make it so sideways, because on your chart it actually looks a lot easier to take the signal if you, yeah. So to stretch this even more, irrespective of that, we don't see the previous days. To no, not stretch sideways, stretch in height in the other direction, not compress, but stretch, 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 stretch. So, okay, and now a little bit up. Perfect. Thank you so much. So if you see from the overnight session, you have that double bottom, and you might even doubt, oh, maybe this is going up, because then we break that 200 moving average at the 67,800 level. And then comes this pre-market news move up. And you don't fade this. You have a good action reaction principle of fading this. Entry price was 63, 336. Sorry, 68, 336. And if you have a daily call, and if you have a daily call that's so convincing, because I didn't say, oh, daily call for this is this, and daily call for that is that. I just said, I just stated basically a general call that today will be a short day, a day for the bears, I think I stated. And then this is your mind frame. So taking that short of that double top, getting that finance, and then even having that large retracement the second time, but ending up, and now I can make a normal chart out of it. So we see where this whole thing was ending, which is near the lows. If you could now switch that chart to a more overview again, that we see where we're closing at the end. So now later you see, oh wow, this is basically a whole directional move. So these last 1, 2, 3, 4, 5, 6, 7, 8, 9 hours, we consequently built a directional move to the downside. So maybe in conjunction of what you said before, it's easy to identify a trend down day, because you just basically continuously move along a certain moving average, and it's just trailing down like 3 days ago. Um, with those days, trend down days, the problem is entry. So the problem is you at some point identify, and then you all the time have the urge to go long. And this is only because you're not short, and you don't want to get in a trend day short later. You want to get the trend day short ideally at the open of in Bitcoin session, which means the previous day. So long story short, the daily call is the whole holy grail for a trade like day like today, because you get that very hardcore if you have a 60-minute wide double top. This is what we had. You can have a limit order sitting there, um, because all you need is a move, because you don't want it to creep there, which was very strong. So you get an ideal action reaction principle, which minimizes your risk to an extreme. You literally, your price is never seen again. This is just it. It spikes up, you get filled, goodbye, you're in safe haven, because even the financing point was a lot later. Um, you can trail a stop. I mean, you shouldn't, but what I'm saying is you have a very low risk point, but you have a very difficult um, execution point, because what's always underestimated is, and let me do the right quote here. Give me 1 second, because this is a principal quote and I don't want to mess this up. Just 1 second. Complexity is the enemy of execution. And this is a statement that's not only true for trading, this is a general principle that can be applied to trading, but is a general principle to everything that you do. So trading is extremely complex by its nature, because you're getting forced into a millisecond action item, which is pressing that button. But pressing that button at the right time is very difficult. And there's no difference whether the difficulty of putting a limit order there is close stressful too, because you're like, really? Should I really do this? And especially if you're then observing and not walking away, you're like, you can also erase these orders. So the question is, how much stress is this? So what made this execution a lot easier and was specific, that I didn't do that often yet, is I had an all over market short prediction for today, and that makes execution easier, which is just follow your rules. 60-minute wide, double top, and you go short. We had the same thing, and if you would be so kind, getting us that chart up on gold. Maybe you could actually even take that chart that I posted in your blue channel for the illustration for Jays, because then we can step into that phenomenon too of synchronicity and what teamwork we're doing at uh, at PPT, um, which was
Which chart you said?
um, I'll point it out to you. Okay, 1 second. It's the last chart that I posted in the blue room. So if you scroll a little up, the chart above the altcoin,
It says gold spot, two orange arrows cover 50% blue arrow.
it's at 939
Oh,
print.
really?
It's above the those that animation of the tens. It's a gold chart with two short entries that I posted underneath. Why don't I just copy the image and put it?
Oh, here that is.
You
817.
have it?
Well, I see you have one at 809 and 8. I think
I
we're saying different
I
time zones, maybe.
I reposted it as the last chart now.
Oh, here we go. Okay.
I'm sorry for the confusion. You can tell that we're not prepping these things. We are actually really talking what uh,
What
our
happened in
own
real time?
principles, which doesn't mean that we don't have presentations, but what I'm saying, this is not fake stuff, and that's why I wanted to show that chart, because one of our students was asking, where do you see good entries for bear flags, and in gold, and then literally both of the sweet spots that I pointed out, we had shortly after the real-time entries. And as soon as Matthew is able to give it that last uh, chart of the blue channel, right now I will illustrate, or you guys can just look at the channel as well if you like. So you see that bear flag. I'm sorry, am I giving you a hard time, Matthew?
Um, is there a bear flag?
Can
Where are we
you
looking?
can you just put that chart up
This one?
last, because I cannot see a chart in the channel.
Oh, I have it up. You don't see the chart that I have up? Okay. Shoot.
So
Oh, that's why okay, let me do this for a second. Share screen here. Share. I had it up thinking that I was sharing it.
thank you so much. I really
No worries.
appreciate it. So um, this is a good example. I mean, here it's even harder. Okay, this is so hard to trade, but not if you do what we're saying in PPT. A, we have the daily call. B, we show this bear flag in the white lines. C, a student asked, where are the sweet spots with the lowest risk, which is the two orange parts, which is you can either enter on the upper resistance line when it's touched, in addition to having stacked odds. So the left arrow was the orange down arrow was the first entry with a double top. That also had a divergence in the indicators, no matter what indicators you had. We see here downstairs the CCI. And today's entry was again daily call, all markets will be down. So consequential rule is we're looking for 60-minute double tops. Wide is preferable. If you try to do this intuitively, not a chance. But if you have the daily call and you already eliminate looking for longs, you already erase 50% of your scanning work. Then secondly, I just explained that rule that uh, the bear flag is penetrated uh, in the fourth hour of the opening. So that's 10 p.m. last night for Pacific time. Then it trades sideways, and that is that test of what before was a support line on the flag is now become resistant. It goes right there with like this huge momentum um, and creates that double top illustrated with a horizontal white line. Again, you can have a limit order resting there, especially since you see these previous edges of where the bottom line of the flag is. If you look to your right, you will also see that there is a slight mountain in the VWAP. So obviously this is a region that also has transactional. This is a distribution zone, double top line continuation, and you trade this. But you will never, if you watch this in real time, you will never have the conviction from feeling the market. It's impossible. Markets are counterintuitive, but this is really for everybody a stretch. Because if you're looking at it from the bottom perspective, we're actually having here what we have a lot lately, a megaphone situation. That's meaning whoever goes long gets stopped out because newer lows are printed, and whoever goes short gets stopped out because there's newer highs being printed. So you need to have your rules in place. So this was maybe a lengthy comment to Matthew's question or comment, which is, yes, I find today a very good example of how a daily call can be supportive, of how the fact is that was one of my main answers to the student who asked about his configurations. He asked, where do you typically take an entry on a flag? Because there's obviously lots of difficult classical TA answers. What we do here is not as classical, but it's working. and it's working. What for us is the most important part, which Matthew also pointed out before, which is risk control in regards to percentages. You have hardly any exposure risk. So the reaction principle, you get your financing point because we use a quad strategy that makes you an instant winner fairly quickly. And through stacking odds, you don't rely just on a chart pattern because a bear flag is like you somewhere in the lower 50 percentiles of an edge of a continuation pattern. That's not something that you can trade isolated. But if you have the instructions that you're only looking short, if you have the instructions that you only have these two sweet spots on a bear flag that you can be using, and if you're stacking odds, apologies, for um, 60-minute double bottom or double top, depending on. I'm so sorry. Then you gain the necessary edge to be able to execute. And going back to the principle that I mentioned um, when I said the complexity is the enemy of execution, you can have all kinds of systems, like literally all kinds of systems. But an executionable system is the only one that eventually makes you money. And to simplify is only to have a top-down approach where you erase uh, probabilities and possibilities, meaning no evaluations in real time besides just matching. All we do is we say, okay, here's a distribution scene, here's a double top, here's a trend line. And then when you have a certain count of edges of 5 to 7, it's just okay, qualify, go, press the button. You can I hand this over back to you, Matthew? I just have a
Sure.
cough.
Yep. Yep. Anybody take that short? I don't trade gold, so I was just wondering. Well, you could see, how the daily call will, like Corey said, put you on the right or put you in a position to have a pre-scanning that can eliminate pretty much half the things you even need to scan for. So you're already kind of not even really looking uh, for those double bottoms. Now, could you have taken this double bottom? Ideally, yes, you could have got out there, and it's all hindsight, right? This was the huge leg down. You could have put a resting order here. This was at what time, right? So if I was up at this time, because I go to bed before, this is what, at um, 9 o'clock? Yeah, I might be in bed at 8 sometimes, guys, grandpa style. But if I had seen this move down, right, and I'd woken up in the middle of the night, I wouldn't, sideways down call. I'm not interested in long here. I put a resting order. This is how I do it. Some people don't need zones. This is the high of the day. But the zone was also drawn prior as well. And we can see exactly what it was back in time. It's pretty much this high volume node of this balance that launched us up here. And then we had a key buying tail here. But, right, so not only do we have the sideways down price pattern set up, which when we come back here, we retest it, but we also have the fact that this general price pattern, which was predetermined anyway, happens to be in a zone that has previous activity. So that's really good. And let's just say you didn't take it on this one for whatever reason, the retest would even be higher odds because you even have this now on top of it. It gives you a second chance. So yeah, this was definitely the trade of the day. Not that this was like, oh my God, the greatest day in the world to trade, but it was a day to trade, no doubt.
But
This
this
would
is
have been
exactly, this is where if I may chime in, this is a very important part. If you're looking at that chart, what is the longest leg in the shortest period of time? So
right.
that double top short, because there's always opportunities in both directions, but that's the advantage of the daily call to filter what's the most likely. So obviously short is always easier than long. I mean, if it's short, I'm saying what I'm saying is from a time perspective. So if you're looking at that chart, that double top is 4 hours and is the complete range. Now, we also have a real-time chart of if you could get that other chart back where we financed this. So financing was exactly at the lows. I shared that chart um, in the blue room at financing time. And yeah, like maybe 1 second. So this is the actual screenshot in real time because we post entries and exits in real time. So we financed below 2,300. And if you now go back to how it looks right now, like to your chart again, this is just proof here for those viewers who watch this later. Um, if we go to your gold chart, if you would have traded this at the open, well, if you traded the open, you would have gotten stopped out with the rest of the position at that time of that second entry. And the real interesting part is we only financed. So it is exactly at that time when you say, um, how come your bars are different? It doesn't matter. Um,
Oh, did you want gold or Bitcoin?
no,
I'm
no,
sorry.
you're good. You're good. Yeah, I wanted gold. You're absolutely perfect. Then the advantage is that you're positioned. So no matter what happens tomorrow, you made the largest leg of today, and I actually measure my trading success by how much of the or a multiple of how much from the daily range you get, because that's the most accurate measurement that you can have for a trading system is how much per what's offered. So we got a whole leg, and this only in financing, and have 50% left that should we continue and looking to the left, there is basically room to the next support at 22.8950, somewhere there. Then that would be our next target. And you don't have to struggle with, let's say, what Matthew said, he sometimes already isn't bad, with a difficult open, because that open was low risk. There was no opportunity to build on the previous day to trade the open. So system refinement and system execution. Um, the system can have very complex components of how to weed through the endless opportunities the market's offering, but the execution should be something that provides instructional detailed course that is absolutely simplifying to avoid any kind of difficulties of execution. And with a quad exit, this short also opened up the most possibility for follow through. So picking your spots is an important thing, because this also a question of resources. If you're training a New York session, how many hours can you focus? And that's depending on how much, as Matthew said, this is only half the load already with a daily call that gives instructions of only training into one direction. So there is sophistication involved in um, planning of how to keep the execution in a manageable state of doing what you need to do to consistently have winning trades on your side. So today was a good, challenging day, and I think we fared fairly well.
It was a good day. Last couple days. All right, guys, as we close here, we'll just one last, if you guys have any final questions, we'll just open it up. But otherwise, that's it for the presentation. All right. Well, if that's it, guys, thanks for coming out. We appreciate you guys coming out in June. Preparing now is going to have benefits when everybody else is panicking because they're not positioned and they're not planned ahead of time. We are going to be planned ahead of time. So thank you very much, guys. Appreciate you
Thank you
guys
so
coming
much
out.
for your time, and my apologies for my scruffy voice today.
It's okay. It
See
was a
you all next Thursday.
Western style scruffy voices are all right once in a while. We got it. So, all right, guys.
All right.
Take
Bye
care.
bye.